Well, good evening, all. Ira Epstein with your Spider ETF wrap-up. And this wrap-up is for Tuesday, and we're here at October 11th, 2022. I was gone yesterday for Indigenous Day, which used to be Columbus Day. I still think it's Columbus Day. I can't stand that some of these things that they want to throw out, it doesn't make sense. We don't even have the Columbus statue anymore in Chicago. I'm anti that. We have a history. What's wrong with history, good or bad? It bothers me. All right. In any case, here's what doesn't bother me. You're getting rally attempts like you tried today. If you were around noon looking at the market, you were going, oh, there's the bounce going into the PPI. And then by late day, it faded again. So we have two big reports coming out tomorrow. Well, actually, tomorrow we got one, PPI, and then after that, we get the CPI reports. How will these reports look? Are they going to be hot? Are they going to be colder? Will the markets react pretty violently to them? Don't know. That's the wild card here. But these are the last reports of this type of inflation reading that we get prior to the November 2nd. Dare I say that? Today's the 11th, so it's still a ways to go. It's 23 days away. That seems forever in this market. We get unemployment claims coming up this week, so you got a lot more goods coming at you. Do I think that inflation has declined? Nope. Am I amazed at how many people out there are saying, oh, this is a great dip to buy? Yep. Why? Because bear markets end with a thud normally. Something bigger happens. And just trying to catch a falling knife here because you're going to catch that bounce? No. For investing people, that might be an opportunity. You know, you buy little here, 2 months later, you buy a little bit more. Eventually, you get cost averaging in, and that might work for you. But if you're a trader, no, the market's a bear market. You play bear markets accordingly. Now, by the way, I've moved on to Tesla to cover now. And I got rid of Goldman Sachs. You know why? They filled the gap. Remember, the market had bounced. I said there's a gap under the market. I thought it would fill it. Came back and filled it. Here's what I don't like about Tesla. Tesla's got competitors and everything coming at it. I use the word everything. GM going into the home battery business. GM moving into the cars against it. GM, their cars will power your house. They're going to be able to take a car, put it up to their battery, store the battery power from the car, work it like that. My point isn't that it's all wonderful for GM. That's not what I'm saying, nor am I saying that their product's going to be as good as Tesla's, which has many years head start on it. What I am saying is there are choices. And choices mean one thing. You lose market share. I don't know why people don't understand this. That's going to happen here. Number two, this Twitter deal is not resolved. Is Mr. Musk going to have to sell more Tesla? We'll find out. So until the markets are ready to come roaring back, I just stand back here. Does this look like a bull chart? If you think it does, I'm probably not the chartist you should be watching. This is a bear market chart, period. We take a look at the next chart. I drew this line for you. Why? Because this is the old low back here. This is the old low there. I didn't line it up exactly, so don't hold me to the exact penny. I just wanted to get you a feel to see that you're coming into a big double bottom area. That's always important for potential support. So that's where you might get short covering coming in the market. When I look at what we've got here, you have lower highs, lower lows. Classic bear move. This market just came from what? The 315 zone. You're $100 lower. You've come down 30%. No, I'm not coming out and saying that this market has to go down to $115. It's not what I'm saying at all. What I am saying is it is a bear market, and you got to be careful. There's another event happening. You're getting very close to where the 18-day average is going to get underneath the 100, another bearish crossover. So that would then, you got the 200-day, you got the 50-day in blue, the 18 and the 100, but you're getting another bearish crossover. Generally not how markets bottom out. When I look at Bollinger Bands, you're running the band. That's called a gorilla glue trade. Why? you just keep running it. You don't leave the band. Now, ideally, it would be just hugging it every day. It's got a day or two that it missed doing that, so it's not classic, but it's a very bearish signal. And you got an embedded reading. I mean, to me, get a hard bounce in this market, the traders are going to sell it with both hands hard, not soft. They're going to sell it fairly hard, in my opinion. Netflix, not doing well with this ad-based idea. Is this a breakout to the downside? If you get another day where you close in the bottom part of the range lower than today, and you were just about on the lows of the day, then it is a breakout. The width of this measures and you flip it over. So you could be quickly talking in this market the 190 zone before you even know what's going on. If you take the 251 to 214, about $37 from that 180, 190 fits right in as I see it. In Apple, still bearish. I love my new Apple phone. I do. I don't like the weight of it. It's heavy. Take your old one, when you transfer everything over, hold them next to each other. I think you're going to be surprised. Higher high, lower low. By the way, I love the speed of it. It is very fast. The camera quality is wonderful. The market coming down here, okay. Oversold market. I'm not keen on getting short ever. Oversold markets. Walt Disney. And here we go. Lower highs, lower lows. Like Netflix. Anything in the streaming arena is getting hit. Why? Because everybody's vying for your dollar. The consumer is pulling back. If you get my full research letter, I'm writing about the survey that the New York Fed released today. And they talk about what the consumer is doing. And I want to use this word and let you understand it. Hunkering down. They are battening down the hatches. They are concerned. We'll find out how concerned with the Prime Day special that opened up today and goes through tomorrow. I'm also hearing that Amazon screwed up. Why are some of the items on Prime Day more expensive than I can find other places on the internet? In fact, more expensive that was on their own site just recently. That shouldn't be a Prime Day item. I don't like that. Are they taking advantage of us? Because we all go there and we think we're getting a good deal. And I read today that that's not the case in everything. But in any case, in this market, oversold, coming down. Next target could be 90.82. When we look at the financial services sector, well, why do you want to be in that until we get to see the CPI, PPI numbers? I think you want to see what they do. But all that happened is you had a bear market rally, went up to the 18-day average and failed miserably. Now you've got 1, 2, 3, 4, 5 days in a row down. It's relentless and it doesn't make a higher high than the prior day. In the industrial sector, you could, if you get now back under right here, 84.64, you could get lower highs, lower lows, a new wave to the downside. All the market did, and I'm going to repeat, you had a big bear move, you had the pattern, higher lows, higher highs. When you got right over here, sometimes it's fun to show this. Let's see if I can get this to move. Yeah, there we go. I knew I did this one right. When the market clears a prior swing line high, just the way it did here, that's a warning sign that if it's going to continue the rally, the 18-day average is the target. From that, the market makes a decision. In my charting course, this is classic what I teach. Markets like to go back to the 18-day average and oscillate there to typically figure out what next in the way of a trend. Watch. See what I'm getting at? Now, if it starts down, that's what I'm saying. Be careful. All of a sudden, 82.09. Let's reverse it. If the market takes out 88.58, since you already have higher lows and higher highs, wherever the Bollinger Band and the 100-day average come in, that'll be it. That band's going to fall again tomorrow. So it's been slipping to the tune of 95.83? No, that's 90.23. And the day before is 91.11. So it's going to probably be around 88.90 if you think about it, right against that high. It's a rough place to get long into a Bollinger Band. Semiconductors, now the bear news is in the market. You're oversold. You're at a Bollinger Band. I'm not saying it can't go lower. I'm saying the edge is off the market. The edge to get down there, this all happened. This is President Biden's move. Now, President Biden's interesting. I read another report today, Dow Jones Newswires, where they had a big detailed report on the president asking the Saudis it's about 2 weeks ago, hey, can you put off your rate cuts, the production cuts, for a month? Now, why did he pick a month? Midterm elections. You don't think that was going through his mind? It's not don't do the cuts. He did offer, according to this news story, that if Brent were to hit $75 a barrel, the Fed would start buying aggressively in oil to replenish the strategic petroleum reserves. I told you about 3 weeks ago, the rumor had come out under $80 they were doing it. That must have been the time that he was talking to the Saudis for the election, not for you, for the election, for the Democrats to get in to do that. I am not about politics, but you can't deny the timing, okay? Trump did plenty bad. He's doing plenty bad. Just call them all out when it's it. All of them, all right? I don't like politicians. Not as people, as politicians. Am I making myself clear? I don't know enough to like them as people or not, to be honest. When you look at the home builders, okay, be careful here. They've held up well. I don't see why. I don't get it. I don't get it at all. From a fundamental point of view, which I am not a fundamental trader, if you take out 56.74, why do you want to own it? And why is it holding up? Everything I read, interest rates are going higher. The Fed's not letting up. Inflation's out of control. The banks don't want to lend you the money for the house. Maybe they do. If you have enough and you can really pay it, you're going to pay a 7% mortgage. I'm probably going to, when you come in, have a bottle of champagne out and give you drinks. You know, at Tiffany, they do that. Big spenders come in. They got a private room. They take you in and they give it, and you deserve it. Well, I think if you get under 56.74, you could be looking at more downside here. There's tremendous resistance with the 100-day average in the upper Bollinger Band, even though it's in an uptrend. In XLE, a bit of a correction, not a change of trend, a correction within a market that really, folks, come on. It took off from the 65 area, 70 level, got all the way up here to 83, a little correction. Overbought, never did embed. It can correct more than this. GLD, bearish. Lower highs, lower lows. You'd have to take out today's high of 156.81 to convince me not to be short. Barring that, I'm looking back at 150.73, and I don't want to see today's highs taken out. In silver, I think today was the sell day against the 18-day average of closes. You don't want the market to get over the 1906 level. You've opened the door up for the 1657. Momentum down, trend down, bias down. In copper, same thing, but I'm bothered in copper a little bit. We're getting closer and closer to Saturday when, if I'm correct, that's when the Party Congress begins in China. I don't know what they're going to do. This market is saying they're not going to do enough. Got it? Lower highs, lower lows. I think it rallied into the idea of the Congress. Suddenly, unless you get back over 29.29, I think the bears grabbed control, and 26.84 is a possible door opening there. TLT, higher high, lower low, oversold, PPI, CPI, dance a little dance. No, I don't want to touch that market. UUP, the dollar. Well, tell me what the reports are going to be tomorrow, and then I can probably give you an idea after the fact what I think they'll do. You've got a temporary situation of lower highs and lower and low, downtrend. But today you turn around, you get up to 30.49. So I'm actually going to have to get rid of these arrows and point an up arrow here and here and say that if we take out today's low tomorrow, that would be a bad sign. You might get back to 30.06. Don't take it out, and I think you're on your way to 30.84. FXE, same type of game. If you take out 89.40 tomorrow, that would be bearish, leading to a possible test of 88.24. It would then turn the trend down. Right now you have the trend up, the bias down, and momentum down. Ugly chart, not easy to make a call off of something like that. So I watch it, trying to figure out what to do. And there is one more. AMC. This is the stock. Remember when it was up to $29.30 going at the first part of the year? And I kept saying, folks, I've owned a movie theater. This business model doesn't work. And I know that they had suckered people into buying bonds and notes. I want to go on record. This business model doesn't work. They don't get enough first-run movies. There's too many screens all over the country. You got to shut that down and make it to the point where it's a destination because you don't have as many screens near you. And you've got to get away from 20% occupancy in a movie theater for the year to maybe 30, 40%. You always have to have enough seats for the blockbusters. So you're always going to have excess seats. I'm not an expert, but I know the game because I'm lost in it. Okay, remember what I told you, Mr. Swiss Cheese did a lot of mistakes. But some of the mistakes, you learn from them. And one of them that I've got for you is right here. Our Guide to Technical Trading, volumes both 1 and 2 from our good friend at Futures Magazine. If you're a market technician, you want to go back and just read each one of these. It's like a booklet. Okay, we copied it into a PDF, full colors for you, brought it up to date. I think you're going to love what you read. It's got something for everybody in this, and it brings you up like that. That's what they're talking about. Elliott, the Gann moves, price time, the Arun indicator is what that is. The Elliott wave principle, the primers for the options, everything you've got there. And don't forget money management. If you're a subscriber of mine, you always hear me talk about dollar risk, always. And I have certain parameters I won't take a normal trade on. And it's a certain dollar amount because I went back over time and I said, if the market exceeds that, is this trend going to bust anyways? And I found out yes. And different markets had some, but I said, I don't want one for each different market. What about on year 5? It's going to change from that. I came up with gradual parts to it. So you put this together, you come up with a game plan for yourself, and that's exactly what we've got for you. So if you'd like to get this, it is free. It includes, by the way, when you're in our free offer area, you got plenty of things to choose from. Just go to our website, www.iraepstein.com, free offers, or follow my finger, go to the top up here, and you'll see an icon appear. Give a click on the icon. It should take you right to that area. I'm Ira. You have a good day. Can't wait for tomorrow, PPI day. Take care.